The two conditions to become micro and short-term time frame bullish are about ready to happen here in the charts. And again, in my last video, I mentioned if these two things happen, the shelf life of that bullishness might not be that much, perhaps even only 12 hours. It could be 2 weeks. Therefore, you would want to be cautiously micro and short-term time frame bullish, but these conditions are about ready to be met. Behind me, you can see roughly 2 weeks of price history, so you can get a point of relativity. So let's, in this video, stay on the very small time frames and jump into the charts, because we might be catching a small swing in short-term time frame momentum. You ready? In that last video, which if you missed it, you can go ahead and stop this video and click right here to see how to set up the lines and set up this red line as well. And I will also link that to you at the end of the video, so you don't have to stop right here if you don't want to. I mentioned in that video how to set up this line exactly, because this is an extremely important line that we're on right now, and it goes back quite a bit. For reference, if I put on the 8-hour chart, this trading channel goes back to the 69K top. This is the 69K top. Bitcoin has been in this channel ever since, and that's the point of control. So it's an extremely important line. That's 69K top back in November of 2021. Now we're at current price, and that's what we're playing with. I showed how to do that. Also, zooming back into this chart, I showed how to set up the 4-hour 10 EMA while you're on any time frame at all using the MTF indicator. All right, now the two ideas stated there is, if Bitcoin, or I stated Bitcoin is likely going to be very, very attracted to hit this line some way or another. And we're kind of getting a shade of gray of what I mentioned in there. I said it's got to touch this line. When it does, it will pull back to touch that 10 EMA. And if it uses it as support, I'm micro time frame bullish once the high breaks that high. And that's it. So it touches, uses that as support, then the next high breaks the previous high that originally the first time hit the bottom of the point of control. And that is it. Now, why are we in a shade of gray? Those conditions sort of have been met. I would say mostly. I would 70%, but it gets a little tricky here because it's not 100%. Why? Look, right here above my thumb. Did that use the red line as support? Not really. Not really. It went under it. It played. Now, I got a damn good long out of it, and I gave an alert for my Discord community. So if you want to follow along, only the VIPs, the upper tier, gets alerts. However, links to the Discord community within the links of all my, or description section of all my videos. It's a little early in the morning, sorry. And make sure you follow me on Twitter. I post some bomb-ass charts, both traditional market, Bitcoin, Ethereum, and altcoins alike. And if you more want a layup because you work 14 hours a day and you don't have exactly time to go on to a Discord community under my time where I'm available to do these live shows and answer questions. If you want recordings and JPEGs 15 to 30 days a week with updates on Bitcoin price, traditional market price, and Ethereum price, and then recordings of the live things we do on Discord, that's what the YouTube tiers are for. Go ahead and click join, that button that's right below this video. Damn, I got through that pretty badly. I needed some more caffeine, but all right. Yeah, so this has all been a choppy mess. I have not been able to trade. I mean, especially with, again, this just stopped me out for $200. I mean, gosh, this kind of stuff is ridiculous. So I finally got a nice good trade there. But during all this, I don't give alerts during chop. But I did after here get the pullback I expected to come through, and then take profit. Was about this line. It's coming up a little shy. So as most of my VIPs who took that trade should still be in the trade. I took profits a little early because I want to try to re-enter as it hits. But that makes it a little bit more complicated of an alert. So, all right, now the conditions have not been perfectly met because I stated that once it goes above, or once it hits this, it needs to use this as support. It didn't. Therefore, we have to stay a little bit defensive here because we haven't had this used legitimately as support yet. You need that before you're confident being micro short-term time frame bullish. And what I mean by micro is 3 to 5 minute chart should convert or transfer into the 1 hour chart, becoming turning into an uptrend, right? So the micro time frames flipping bullish should give enough for a couple of positive oscillations. When the 1 hour chart, the Stokes go up and down, up and down. What I'm thinking is, so from when the let's actually just look. When the Stokes of the 1 hour go up and down, I'm going to pull them up behind me here. I mean, it takes about a day. So let's go measure from, this point to this point. Look, that's 17 hours. So it's almost a day, right? From trough to trough is about a day. Therefore, when the micro time frames flip bullish, 3 and 5 minute chart, you can usually get a higher high and higher low twice. Not always, but twice. So it could be 2 days that the 1 hour chart makes higher highs and higher lows each time that oscillator goes up. Does that make sense? And that's what I'm looking for. I'm not looking for much more than that. And on the second oscillation of the 1 hour, so the second day, I'm going to be way more defensive, and I'm going to be focusing back on this 5 minute chart or the 3 minute chart to see how the small candles are interacting with this red line. But even as of now, with those expectations of a couple days of bullishness and not much more, because I'm not going to extend the shelf life of this micro move, I'm still a little defensive because this red line has not been truly used as support. So the two conditions have been mostly met, but I need to be less confident in my entries right now. Am I making sense? Because it did not perfectly meet one of the major conditions, what I mentioned last time. I said it's got to touch this, come back, use this as support, then make a higher local high to the first time it touches. It didn't use it as support. So what am I looking for? I'm looking for this to make a higher low on the bottom of the point of control. Hopefully, it puts in some time here and lets this red line catch up so it uses both at the same time. But what could happen is price could use this as support and make a higher local high before this red line ever gets there. So if I can extend this red line, something to that effect, in that event, price would not have actually used it perfectly as support, the red line, because it wasn't there yet. So what I think, I would be extremely confident in taking, me personally, this is not financial advice, this is not a trade setup for YouTube, right? So I'm not mentioning risk management, profit taking, anything. This is my idea. I would feel confident with an entry only, not a full trade setup, but I would feel comfortable if this could put in some time and wait for this to catch up there, and then it starts ticking higher. I would probably hit that pretty hard. That would make me confident that the shelf life of the move will last, another whole day or so. Does that make sense? But if it simply comes here and then makes a higher high, and without touching this 4 hour 10 EMA, I would still probably get into that, but I would take profits more quickly because I would assume it's going to slam down to then touch the red line somewhere up here. Does that make sense? So I would prefer that the red line comes up here, price puts in its time, waits for the red line to catch up, and then it takes off. And I think that would drastically extend the shelf life, perhaps even 50% or a little bit longer. Now, the ultimate targets of this, I think I'm just going to use horizontals here. I'm going to put, where are my 20K horizontals? Bam. All right. Right here, you have the monthly open line, and it's just under my horizontal. So I'm not really for sure where, what could end up blocking this, but just know that the monthly open line is right under 20K, which could be why whales decided on a 5 minute candle to make Bitcoin go up 10% because they wanted to push. Let me go to the monthly chart so you can see what's happening. So all of this happened in the last 10 minutes of the monthly, quarterly, and 6 month candle close. And I think what was happening was, or at least part of the incentive to risk like tens of millions of dollars to do that, that was a risky play. They put a lot of money on the line to do that. That was, but it looks like whatever they did it successfully. So essentially, this monthly candle and the 6 month candle were down here, right? With 5 minutes left to go, and then they just bam. And made it so it had a nice wick. And what that does is it allows the ceiling of the next month, how much it can backfill, and it gives it more breathing room to do backfill, so there's a little bit more space before it's then driven down most likely. Does that make sense? Because if this, here, let's zoom out. So had this candle, had this candle closed way down here, right? There in trading, you know, the amount that the next month can go up in a bearish sense, if it's going to be red or just not that green, it's going to be more limited if that closure was way down here, because a higher backfill beyond halfway of the candle, it's a little bit, you know, it's probably not going to happen. First off, like you're probably not going to get more than halfway up the candle. So if they could have, you know, the idea could have been to drive up the closing point, therefore halfway up the candle, you know, isn't so, or getting to a certain point isn't so aggressive because the candle just got shrunk a little bit. And there won't be as much pressure down inherently within the process of backfilling up. Am I making sense there? I might be just jibber jabbering. But raising the closure allows more breathing room for a wick up before it then slams down, if this is going to be a red candle. So there's more play room here, right? And that might not be their only incentive. However, it happened in the last 10 minutes of the candle closure, so raising it up and giving a little breathing room for this month for a backfill, I think might have been the plan. In addition to their options, there might have been big money that was way out of the money on an options play, something to that effect. And even though the options weren't closing right then, I really don't know what the deal is, what incentive basis that had. So, all right, anyway, but then again, that's what I'm looking for on the micro time frames. That's it. I want to see this red line being used as support and the bottom of the point of control being used as support. If price gets to the bottom of the point of control, it makes higher highs, I'm going to be more cautious because I think it might hit the monthly open up here at 20,000 or hit the next horizontal somewhere up at 20,200 or 20,100 and then slam back down. But if it slams back down as the red line, it might not stick its landing, and that might have been it. Right? So it's going to, and that's why I would be way more cautious if it can't use this truly as support before making a higher local high. Because when it slams back down, it's going to overshoot. That might kind of ruin the structure, and then it might just go sideways and chop, and it might be untradeable. And so this should help you get through. In addition to my last video, which if you didn't see it, you click right here if you want to learn how to set up those lines. This is going to help you get through the 5th and 6th of July, but there's an FOMC minutes release, so watch out. Really tricky shit might happen around Tuesday PM, and click this video right here if you want futures trading tips that you can't find anywhere else. You just got Timified Worldwide.